Hi, this is PR Sundar. Welcome to Post Market Report sponsored by Delta.exchange. Today may be the final audio file for you. From tomorrow, I think I'll be able to do the video. I think my setup is ready by tonight. Coming back to the markets, what a volatile market. US market closed at all-time high and Japan market closed at 34-year high, whereas most Asian markets were closed due to Chinese New Year, but our market came under intense selling pressure. In the morning itself, the Nifty was not showing anything very bad, but the broader market was under intense selling pressure. I think the markets were not happy with the PFC results which came yesterday, and PFC at some point of time fell about 11.5-12%, and REC fell 7-8%, and BHEL fell 6-7%, and most of the PSU stocks and came under a huge selling pressure. But except State Bank of India, State Bank of India is on a different trajectory. So probably, there are a lot of people may be having some long futures in these stocks, and such a big gap down, would have triggered a margin call for them. So because of that, so the collateral damage was seen in other stocks also. Otherwise, how would you explain? Yesterday, the people said the RBI chairman was talking about the Paytm bank license cancel, so he was talking about more regulations and this and that. So they thought that, what happened to Paytm bank? Why it cannot happen to Axis Bank or ICICI Bank or IndusInd Bank or HDFC Bank? So that was the logic why people were scared yesterday and they sold off the private sector banks. So at least there was a trigger yesterday. There was a reason yesterday. But today, what was the reason? Why Nifty has to fall 170 points from intraday high to intraday low? There was no news flow, nothing. So probably this is the collateral damage. Say, for example, if somebody is having a long position in PFC, REC, BHL, and also in ICICI Bank, HDFC Bank, like that. Now, such a big gap down, his MTM loss would be very high. So he may have to square up all the positions in order to meet the obligation. So he would be selling the ICICI Bank, HDFC Bank along with the PSU stocks. I'm not talking about the people who are holding the stocks in cash market. I'm talking about the people who are holding the stocks in futures market, stock futures. So probably that was the reason there was a kind of a panic. In fact, today's panic was more than yesterday's panic. And, for no reason, broader markets came under such a severe selling pressure. So as I told you in the morning, if the markets are down for the week and if the market continue to be down in the first half of the Friday session, then there is every possibility there will be some kind of a short covering in second half of the session because mostly traders will not like to carry the short position home uh, ahead of the weekend. So because there'll be 2 days holidays and moreover no US markets all trading at all time high, so anything can happen. So because of that, these people may like to square up. So that squaring up of shorts may trigger some kind of a short covering. And Bank Nifty was just too volatile and came down 300 point, went up 500 point, again came down 300 point, again went up another 500, 600 point. Finally, there was a good recovery. Now, only problem is HDFC Bank. So other banks have recovered very well, but HDFC Bank has not recovered very well. So global markets are looking good. European markets are okay, and US markets right now trading again at a fresh all-time high. So if everything goes well, the market should recover. And there were some positive indications. Number one, though FIIs have sold for 5,000 crores yesterday, today they have actually bought for 140 crore. It is the domestic institutions who have sold for about 400 crore. So that's one positive news. Second one, today morning the India VIX was higher. So because the fear was very high, So towards the second half of the trading session, the India week started coming down. So that's the second good news. The third one, even somebody tweeted in my timeline also, look at US market after hitting all-time high, it trading with a great stability. Whereas, once we hit all-time high and markets, like Nifty hit all-time high first, then fell 1,000 point, again shot up 1,000 point to take another fresh all-time high just by 1 point, again falling, So our markets are going all over the places. And today is the 11th trading session in February. In all the 11 trading sessions, markets were too volatile. So global cues are good. FIIs, yesterday we can say the sell-off due to RBI policy is an aberration. So FIIs are not selling, global cues are good, market stabilized. So let us hope if not market going higher, at least the markets can start stabilizing. And moreover, for the next few weeks, there are no major triggers for Indian markets. And Monday inflation data is there, but inflation data is not a big deal. US inflation data is there on Tuesday. That will be the big deal. So we will see how things go. Hope you enjoyed listening to this audio. Thank you for listening.